All right, stock market analysis and projections. First, of course, this important information, and it's about how our analysis is done, how we approach our analysis to the market. Important for you to read, and also about how you use our analysis and the importance of trade ownership. I do have a video that I did on trade ownership that I think is very important in our library. Remember, our video library has got something over 1,000 videos in there right now, and there are close to 300 videos that are what we call evergreen in trade tools for tax or trader psychology, or those things that I think are very valuable. So this video on trade ownership, I think, is very important for you to see. Because it doesn't matter what I say, what any of our team says, or what anybody says, is that you deem as professionals in the market that share information. It's always up to you to take ownership of your own trade. Nobody can tell you where and how to get in or where and how to get out. That's up to you. I want to remind you that we have extended for 1 week our premium services preview. Everything on this list, go to the top of the askSlim site, click Learn More, and sign up for free. No credit card necessary. You're going to see so much about what we do. No cost to you. This is really going to be helpful to you. So do that right now. All right, stock market, multiple time frame analysis. I'm going to look at the S&P 500, NASDAQ, and Russell weekly and daily with our proprietary indicators. I'm looking at the charts and sharing with you the charts that we give to our level 4 members, and they can manipulate that on the Thinkorswim platform. And for our level 3 members, level 2 members selectively, the charts are shown in static form, which you can access in our chart hubs. So I'm also going to show you, for the first time ever, an S&P Russell relative strength chart that I put together that I think is going to be very informative and regarding the questions about this rotation period that I think we're in, and the period of the NASDAQ and the Russell, the NASDAQ and the S&P 500 losing its relative strength, losing the upside leadership, and that now moving to the Russell, the mid caps, value stocks. So we're going to take a look at that unique chart also. This is what our level 4 members get. It's our chart grid. And all I have to do is open up the S&P 500, as you see right over here, and it blows up. And you can see way up on the top here, those arrows. So I can just move forward on the charts, as you see right here, just by clicking that. It's just the great programming that was done by Thinkorswim, way back in the early days when they first came online. And of course, those are good friends of mine, Tom Sosnoff, Scott Sheridan, that brought that on way back, and then of course taken over by TD Ameritrade, and now by Schwab. So this is our preferred platform right now. You know, we never know how we're going to develop things moving forward. You might look for some good stuff coming regarding askSlim charts somewhere in the future. Little tidbit I'm giving you right now. Matt is probably squirming in his seat now that I said that. So let's take a look here at the weekly chart on the S&P 500. So you can see it's moving up right over here. S&P 500 gaining about 1.5% on the week right now, as it's on its high of the day, and fairly close to the high for the week. We had a big reversal. I'll show you on the daily chart, but still momentum on the upside, and still strong, and still carrying the market, as the buyers just simply refuse to believe that there is any potential top anytime ever. So the buying still coming in. You can see that what we're looking for is a correction in here, a very, very modest correction down to about 54.80 is what we're looking for right now. That's only about 3% on the downside. It could get worse. And the timing for this I can show you as we look on the daily chart. Now here is the reversal that's beginning to form right there. Cycle still powerful, moving on the upper channel right here in what we call the slim cloud. Upside projection right over here to about 56.60 right there. Pardon me, with the possibility of 57.12 if it's able to get through this level. That engulfing is important. I want you to notice that when I look back at these cycles right over here, this cycle peaked with an engulfing, peaked with an engulfing, and peaked with an engulfing right there. And then we had the engulfing here. It's trying to get back up to that level, but it's still, I believe, at a level where it's going to be hard to maintain the upside move, and I think we're going to get into a corrective period. This trough right over here aligns with the weekly. It also aligns with an intermediate, with a minor monthly cycle. It's probable that it's going to look much worse than this when it starts to move to the downside. But right now, because we're agnostic, we follow the patterns as they're given to us. So right now, the pattern remains positive with the possibility of creating an upper channel right there, which would then give us the move up into this area at around 57.12. So I expect this to be the area where it stalls, 56.42 peak. And we are right now only within 7 points of that as the market S&P 500 is up 50 right now. Also look on the bottom, the option bias study. This one tells you what direction to keep your options biased in that particular symbol. It has been positive back over here since May 13th, even through these minor corrections right over here. It has told you stay on the long side, no lie. So again, a trough coming right over here on the daily, which comes out into August. When I look over here, this comes out into August. So there is risk that there will be about a 3% decline. This support over here is at 53.75 right there. So that would make it more like a 5% decline, but these are very, very shallow declines. Now, out over here in this period, and make sure you watch my big picture analysis, is where there is much more risk coming out in September, October, November. This is election day, November 5th. And I think there's going to be some hard sells going on during that period. I'm anticipating that right now. I have nothing right now that is negative other than this warning of that engulfing pattern right there. This is the momentum conditions based on the slim ribbon on the daily chart and the slim ribbon PO on the bottom, which gives you these arrows that says it's going to resume to the upside with momentum. And you could see how well that works. Look at back over here. This is a askSlim level 4 study. So again, please do become a level 4 member to be able to get this study up on the Thinkorswim platform. Extremely valuable. And here's the 2-hour chart, and this is the askSlim market condition indicator. While it's up here in these 80s to 100, it's in bullish condition on the for the near term, essentially. And you can see also this momentum on the slim ribbon PO on this time frame. I'm giving you positive momentum conditions as the market has this turnaround and then rebounds back up. I think we're going to see it turning around again early part of next week, and then again starting that decline into the August timeframe. So we'll watch for some signs of it changing. The 2-hour will be the first one that gives you the indicator that it's turning over. We'll take a look at the NASDAQ on that also. So here's your NASDAQ. You could see actually that reversal was bigger here in the NASDAQ, and it's not really threatening that upside number. This is the fib extensions from the daily chart. Again, we're looking for this correction over here down to about 19.8. So that's not very far when you look at that. That's only about 3%. Down over here is about 5.5% at 19.277. That's what we would expect to happen into August and then moving up again. You can see that. And this rally over here will tell us some things. Of course, so will this decline, assuming it does come. Here is your daily chart, and you can see in there, it's, you know, looking a lot weaker than the S&P 500, which is what we expect. This level right over here would be our first warning level down around 19,800. If it breaks this level right over here at 19,577, that would be a breakdown, complete breakdown, and tell us that a warning of an intermediate peak. I didn't tell you that exact number on the S&P 500. Let's go back. that number over here is 5446.53. That's, I've corrected that a couple of times because I had it wrong. That would be where the breakdown is in here, and it's got quite a ways to go before you get to that. So back to the NASDAQ right over here, you could see that the option bias indicator is still positive, still giving you a good sense that there will be upward strength until this changes. When it does, it will turn yellow. Yellow is a little hard to see. Yellow is right over here and right over here. But I make it pretty clear when it's red or when it's green, as you could see, and it still remains green even though it did turn over. Same thing here for the daily. This is the daily momentum conditions and the slim ribbon PO. This is what the slim ribbon looks like on the daily, and it's on an area chart, and it's certain you can only do this on certain platforms, and that it really screams at you when the conditions are positive or negative or neutral. So I like to have this kind of a chart up when I'm looking at momentum. Momentum still positive in the NASDAQ on the daily. This is a look at the momentum on the 2-hour chart, and this did turn neutral, as you can see right over here. Still, the market condition indicator very positive at 94. So this turning neutral right over there, and the engulfing pattern on the S&P 500 is the only thing I have right now to say that the market is peaking. Timing is right for it to get into a topping period. But we don't have a lot of indications of that yet. We will look for the 2 hours to turn negative first to be our first indication that there is something changing, and this just did turn neutral right over here. So that's a look at the NASDAQ. This is the Russell. Now, Russell put on this giant week right over here, which is up something like 7+% on the week. This was upgraded, so the structure in here changed. It moved past that high right over there. And upward projections right now are at this 50% fib extension, which is at about 2187. And then this other one up over here, the 61.8 at about 2245. Now you see, this is the corrective period that we're looking at in the other indexes. We expect this to be also very shallow. So this right now is 2106. That would be only a 2% pullback in here in the Russell, while we're looking for 3 to 5% in the other indexes. This is really 2 to 3% probably right here in the Russell. So we had a question earlier on, do I think the Russell will overperform on the downside and the mid caps? I think yes. I think they won't fall percentage-wise as much. Again, we are projecting after this little correction to move up to these high levels right over here, even potentially to the major fib extension at 2287 right over there. Again, these are our level 4 charts. As I look here at the daily, we had DJV ask about if the daily has changed, and this is what we have right now. This gives me the most clarity. As I look at 2 out-of-phase cycles right over here that both look very clear to me on this Russell, and this one right over here bottomed right here. We had the minor one bottom here, and they're both rising, and you can see what happens when they're both rising right over there. That really makes a difference. Let me get the pointer. So both of them rising here, spike to the upside. Both of them rising here, spike to the upside. This one a little bit off. You can see that right there, but look right over here where it nailed the bottoms and both rising right over there, spikes to the upside. So you get a little correction, as you can see right there. You can see that happened right over here on that first upside move, right over here. All of those give you small corrections and then moving again to the upside. So the Russell to me looks like could get a pullback. There's that weekly 23 at 2106. Maybe it gets down over there in the next couple of weeks. Remember, we're looking for August 5th. This is right around the same time frame right over here on the other indexes, and then up again. So this is what happened. As you can see, it's been negative momentum and neutralized here on the daily chart, and then turned green. We have positive momentum, as you can see right there. And here on the daily chart, this is cool because the market condition indicator was negative this whole time, down here to as low as -81. Once it gets to the -25 level, it's a test. The test meaning that this is a multiple time frame indicator, 4 time frames built into here. If it's still negative, it will fail in here because the longer term has a bigger weighting, those longer term inputs. If it can get through that plus 25, it tells me that the longer term has lost its downward energy and we're now turning positive. It did just turn positive again. Level 4 indicator, fantastic indicator, really gives you a great sense for when it's positive, when it's negative, and when things are changing. This is on the 2-hour chart, so this is kind of a near-term chart, but still, this is a bit of a longer-term indicator right over here. And this shows you how it has changed positive. Again, on the S&P 500, looking for a peak to form right in there. And then once that peak is formed, probably somewhere in this channel right over here, right around this level, 56.55, the high was 56.42, then it's beginning to turn down and give us a peak. That I think is the highest probability based on this corrective period that is due right in here. That is a look at the indexes. I want to show you one more chart that I think is fantastic. You've never seen a chart like this because only I present it. This is a cycle chart which shows cycles in relative strength between the Russell and the S&P 500. This line right over here that you see is the S&P 500. So this is showing you on a daily chart going back a year. Now, what I want you to see is that the candlestick charts are simply relative strength. So when it's moving down, the relative strength of the S&P 500 is weaker than the Russell. So the Russell is stronger when it's moving down here. So when the market's moving up and this is moving down, the Russell's doing even better. So that's what this looks like. Now, what I want you to see is that the stock market has had periods in here, and you'll notice the cycle periods in here, that are 20 to 30 days where you get into Russell being in positive relative strength. That's right over here, and right over here. Russell positive relative strength. This was about 20 days. This was about 20 days. This was about 30 days right over here. And here you could see we've entered into the positive relative strength. That is the Russell, the S&P losing relative strength compared to the Russell. What that says to me is that because this is only 2 days on the downside, that you're likely to have, well, another something like 18 to 28 days where the broad market, the S&P 500, the NASDAQ, is weaker than the Russell, the mid caps, the value stocks. So that says to me that what I'm showing you in here is kind of a look at a flag period that can form in here where maybe the S&P 500 and the NASDAQ get a little stronger. But then in this next cycle right over here, which comes out into September, it's likely to see the Russell much stronger again, or the S&P 500 weaker. Remember, when this is going down, the S&P 500 relative strength is weaker. Look at the size of the relative strength change right over here. It's pretty hard to find anything that big anywhere on this chart in the last year. What this says to me is that we're going to look for a period on here where the Russell is stronger than the AI tech-driven indexes of the NASDAQ and the S&P 500. It also warns to me that we're getting into a corrective period in the stock market because those leaders are not going to be driving those indexes up. So this to me is a great look at why, number one, you look for the Russell to outperform the broad market, the S&P 500 and the NASDAQ. You probably will see days of positive breath when the stock market is down, NASDAQ and the S&P 500. And you will also probably see that we are in a corrective period. And this is why, looking at that chart and the S&P 500, I'm just going to blow this up again, why I expect that this corrective period right over here, which aligns up with the S&P 500 losing relative strength to the Russell, is likely a corrective period out over here into August and this actually turning out more negative, and then a more negative channel forming somewhere out over here where it actually does begin to accelerate to the downside. So I want to show you that this is really extensive, deep analysis, and this is kind of analysis I do and our team does as we look at ways to really get a better understanding of the market, market conditions, correlations, what's driving the market. I really wanted to bring this because I think it's just a superb way to get a good handle for the market, especially an unusual market like this that has been driven up to valuations that are just, in my opinion, very absurd and likely to have a lot of corrective waves out there. And knowing which stocks to buy, which sectors will be likely to be positive, which ones are likely to be more negative. And if you go back and look at the work that the team did, as we shared our analysis, you could see that we saw that there are different sectors of the market that are turning positive now, while money is beginning to flow out of the high techs. And I think you're going to see a lot of that moving forward, as I showed you in this relative strength chart. Anybody who sees this and wants to send a comment on that, I'd love to hear it. You could send it to team@askSlim.com. That's my look at the stock market. If you're new to askSlim, you can start learning from our team of pros. Go to askSlim.com, look around at our broad amount of education and analysis for traders and investors, and sign up for free if you're brand new on our popular or premium services preview, which has one more week to go, and you get a ton of what I just showed you. Absolutely free, no credit card.